Baby, we can talk all night. I want you, I need you, but there ain't no way I'm ever gonna love you. Now don't be sad, don't be sad, 'cause 2 out of 3 ain't bad. Don't be sad, 'cause 2 out of 3 ain't bad. All right, so I have closed 2 out of the 3 transactions that have prevented me from being my happy, cheerful self. All 3 of them were condos. They were all extremely complicated, and the one is still pending. So let me tell you a little bit of the details of what happened with the 2 that did close. As I have said in my previous podcast, welcome to my podcast, Retirement Solutions for All Ages. Going forward, you might be hearing more about the happy results of retirement because I'm going to do a lot more traveling and a lot less of the everyday loans, and I do have an entire team at Nexa Mortgage and at Axon Realty to help out. And I want to connect you with some of those great people. So please, if you know anyone that is looking forward to retirement or in retirement, have them hit that subscribe and like button. Tell them about the podcast, Retirement Solutions for All Ages, from Ruth Johaningsmeir. And I'm with Nexa and Axon, and I'm here to help you enjoy retirement. So, the 2 transactions that I recently closed were through condos. Now, the condos are definitely the slowest part of a mortgage because you're having to deal with so many different people, some of them closely connected to the situation, others entities that are hired out. So I had a wonderful person there that I was working with, and she was responsive. She emailed, she answered phone calls, but she didn't have all the answers. She had to go to her boss to get those. And even her boss didn't have all the answers because you have a board of directors or a HOA board, and sometimes you need their entire input to get the answers to the questions, such as what the reserves are, how they do the accounting, what the minutes are. So that's a complicated issue. But there were other complicated issues with these 2 loans. One, one of the individuals retired partway through the loan. So when you start a loan and get pre-qualified based on income, and suddenly that income changes, it's like starting the loan all over again. Now, the other situation in this case was also I tried putting them into the accelerator Equity Accelerator loan, which I think is a phenomenal product. I have it myself, but I have tried putting so many people into it, and it takes a long time, and it comes down to asking the applicant if they wear tighty whities or boxer shorts. It is such an invasive loan, and it takes a long time. So, partway through the process, they have a contract and they have earnest money down on this contract, and we couldn't wait any longer. So not only did we change how the individual was qualifying, but we also changed loan programs and went with a traditional 30-year fixed 20% down or 25% down. So that was one of the complications and why the loan took so long to close. Now, in addition to that, the other loan had a similar situation. in that when we started, uh, she was turned down because the HOA had a mandatory third party fee. In this case, it was golf course membership. But I remember one of the first times that I heard about mandatory third party fees tanking a loan was a nudist colony. And you had to join the National Nudist Colony Society in order to purchase the condo in the nudist colony. Well, the person involved in that loan officer, she tried everything and she tried every lender and could not get this loan to close. And they ended up having to eventually give up or pay cash. So, in this particular situation, there are things called non-warrantable condos. Now, we have dozens of lenders that do non-warrantable condos, but Fannie Mae and Freddie Mac will not lend to a non-warrantable condo. There are a couple of things that can make, or a few things that can make a condo non-warrantable. One, a lawsuit pending. That can tank the deal real quickly. Well, this particular condo had a slip and fall lawsuit. So they had to investigate whether or not this was going to rule them out. It depends on what the insurance amount is, whether it's pending litigation or finalized litigation, whether the dollar amount of what's being awarded was too high or, acceptable based on their insurance or what they have in their HOA reserves. So that was a complication in that one. The other complication was the mandatory third party fees. That was considered, according to Fannie and Freddie, that they were a condotel. Well, when you fill out the questionnaire on the HOA's condo questionnaire, one of the questions is, are you a condotel? And this particular property said, no, we are not a condotel. But when you looked into the archives, the Fannie Freddie designation said, yes, you're a condotel. So we had to go with a non-warrantable condo lender. Well, we'd actually been turned down by two lenders because of the implications of this particular property. When we went to the third lender, which delayed the time because we're starting from scratch again, that lender was a disaster. I don't know if they were so good the month before and that Nexa Mortgage has so many loan officers that when I was told, oh, these guys are great, these guys are fabulous, and I talk to them, I get everything all ready, and then all of a sudden, the turn times, the times that it takes for me to turn in the loan, the underwriter to review it and get it back to me had quadrupled. So this was no fault of the buyer, but yet the seller is really upset because we have asked for extensions left and right. And it was always something different causing that extension. So what ended up happening is the seller refused to sign any more extensions for the sale because she didn't think it was going to go through, whether it be she didn't think the buyer was qualified, whether I was using crappy lenders. She thought it was the fact that if it hasn't gone through now, there must be a reason, and they're looking to deny the loan. Well, I've had that situation before where I'm working with a lender, and for whatever reason, they deny the loan, so I take it to somebody else. Well, that somebody else has a different reason for denying the loan. But in some cases, I know immediately that gut feeling that, oh, they don't want this loan, they're going to deny it. And I took it away from them almost instantly, took it to somebody else that I knew would approve the loan because every lender has different rules and regulations. And then you have the master rules and regulations of Fannie and Freddie, but we have lenders that don't go by Fannie and Freddie. So those are called non-QM lenders. QM stands for qualified mortgage. So one of the advantages of using Nexa Mortgage is we have over 250 lenders, and we know which ones should be the ones to use. But things change. I mean, I had just gotten a call during the height of all of this that somebody referred me to a borrower that had bad credit. I'm like, oh, that's not a problem. You know, we have lenders that will go down to credit score of 500. So I get on the company meeting that week and find out the two top lenders that do credit scores under 600 were no longer using for the low credit scores because they had had some difficulties. And with the way the industry has been in the last 4 years, we see things coming and going, that rules change up to, a couple of times a day. So with both of my condo lenders, I said 20% down. There was always a possibility that we had a lender that would only require 15% down for a second home or a DSCR loan. You can do as little as 3% down if it's your primary residence. But if it's an investment or vacation home, you need to have at least 15%. But from my experience, these companies that say they'll take 15%, they could take it away mid loan. And suddenly they want an additional 5 or 10% more. So I told them we don't want to do the 15%. That and it costs more. The interest rate is higher if you have only 15% down instead of 20. So I told them we need to do the 20%. Well, both of these loans, when it came right down to it, they wanted 25%. So in the future, if ever doing a condo or investment home or DSCR, please make sure you have 25% down. Rates even better if you have 30% down. But my experience is they might pre-qualify you for 20% down, but when it comes to the final straw, they're extorting an additional 5% from you. I'm really sorry. It's a horrible situation. Um, Hopefully you don't have to deal with that, but I would definitely plan, and it helps with, the finances of um, getting rent coming in will help pay for it. It's all a matter of risk assessment. So I am still working on number three, and that one has been, well, it relates to one of them that I did close, that the seller doesn't want to do the extension on the contract anymore. But if the buyer can come up with the money, then they will do the extension. Well, that makes the contract null and void in the interim. So they can put it back on the market. And if the seller or the buyer comes through with the cash, then we can close quickly because all of the paperwork and the title and searches and HOA have all been taken care of. So, what you want is somebody who is going to fight for you, who's going to go above and beyond and make sure that all of these things have been done. And that is what I believe I did for my buyers and my sellers and the title company and the HOA. And I truly appreciate all the help that everyone put into it. But I want you to understand that when it comes to financing a mortgage, there are so many cooks in the kitchen, and you don't know who's to blame. And hopefully, if they drop the tray of glasses, somebody like me is going to be there to clean it up for you and make sure that you get a final product and can live happily ever after in your vacation home and earn income from your debt service credit ratio, DSCR, Airbnb property, that you're earning income from that so that you can retire and travel and enjoy life, because that's what retirement is all about, having the money to enjoy your life. If you got anything out of this episode, please hit that subscribe button so you don't miss future episodes. And a lot of traveling is coming up in future episodes. So please tell your friends, family, parents, children, all adults about retirement solutions for all ages. And thank you for listening. I want you, I need you, but there ain't no way I'm ever gonna love you. But don't feel sad, 'cause 2 out of 3 ain't bad.